Hello guys and welcome back to the channel. So in this video we're going to talk about the epic crash of Tesla and why is Wall Street selling Tesla and if you should be selling too. I want to go through this. It's going to be a very interesting video if you're a Tesla investor, and as always, if you like this content, please make sure you hit the subscribe button that is below here. And if you want to go further and support the channel, then check out the Patreon link, which is the first link in the description box below. So Tesla has collapsed. This is due to a few factors. One of them is Elon Musk buying Twitter, and there is a rumor that he might have to sell some more shares to be able to buy Twitter. Then there is the macro. Everything is falling, and obviously this is affecting Tesla. However, this is somehow disproportionately affecting Tesla. You can see Tesla is currently 50% off from its highs in November 2021. However, just in the last 1 month, it's down almost 35%, 34.89%. So super mega crash on Tesla. So obviously there is more than just the macro happening. So the real reason why everyone has been throwing Tesla, the baby, out of the bathwater and the bathwater out is because there started to be real fears about demand because of the Q3 production numbers that they reported. So it was the first time ever where there was a significant gap between how many cars were produced and how many cars were shipped, and this was a 5% gap, and people freaked out about this, even though Tesla gave a perfectly reasonable explanation, which was that they have been always pushing the stats to be really up on the quarterly deliveries, and this time they're so big that it just doesn't make sense with the freight costs, and they focused on a more holistic approach, as they're not trying to push the numbers to optimize to have the best delivery numbers in the quarter. They rather optimize on having the lowest cost to deliver to the customers, and this obviously results in one quarter when this hits, and then the rest of the quarters are going to be fine after this. So now the question is, which of these factors is going to influence your view on Tesla from 5 years from now? Because the Twitter deal is not even going to be on the radar 5 years from now. The macro is going to turn around. We know that there's good times in the market and there is bad times on the market. However, the demand question, if Tesla is maxed out in demand at between 2 to 3 million cars per year, does it deserve to have the current valuation? So this is actually a real problem. If you believe that there is a legitimate demand issue with Tesla, you should be selling the stock, because if the production maxes out at 2 million cars per year, the stock, based on my calculation, I have the whole calculation, which you can access if you join the Patreon, first link in the description box below. Then in 2025, the stock should be worth $195, and that's in 2025. So if you want to see some return on your money, then for you to make Tesla a good investment, the price should come down to like $140, $130 now. The earnings, they are reporting earnings in a few days, and this is, if you are thinking about selling Tesla or holding Tesla, this is the number one thing that you should pay attention to. Do they comment on demand, and how do they see the demand going forward? So personally, I don't think this is a problem, and I think that this gives a very good opportunity for long-term investors and ultra long-term investors to buy the stock at an early Christmas sale. And I'm going to show you why. Tesla raised prices in 2021 and 2022 by about 30%, and they also had an explanation for this because they had such a long waiting list and they saw inflation going up, and because their waiting list was longer than a year at that point, they didn't know where inflation was going to go. So they had to sell at the anticipated, future prices. And this is why they raised the prices to anticipate a lot of inflation. And they said that they can bring back down the prices should this be needed and should the inflation not play out as they want. So Tesla continuously optimizes the production line, giving them higher and higher margins. So the more they produce, the better they get at it. And just a recent example is they are deleting the ultrasound sensor from the autopilot suite, and that means that it's significantly cheaper to produce. I could give you a million examples. So all these things going into the future increase the margin on the cars. So the raw material prices had been falling like crazy. Iron is about 30% off from its peak, and nickel is down from its peak by about 60%. And many of the raw material prices are way less than they used to be. So there's one last point, which is as the Berlin factory ramps, Tesla is going to skip a 10% duty on every car that they had to import into Europe, because the cars will be made in Europe, so they are not imported. And that means that they will have a 10% higher margin on the car. So why am I telling you this? I'm telling you this because all of these increase Tesla's margin, which means that they have a lot of room to play with their margin should they need to. So the things that will increase demand that we know about, and then I'm going to talk about what Tesla can do to increase demand should this be a problem. So the US tax rebates will kick in 2023. We all know that the Inflation Reduction Act is going to come into effect, and most probably US Tesla buyers are holding out on their purchases to be able to get a cheaper price on their Teslas. Then here's the second thing. As wait times decrease, it actually increases demand. I was a guy who was standing in line originally when the Model 3 came out and had a reservation. Elon at that time promised the Model 3 would come out, I believe, within 15 months. And I was thinking it's perfect because the lease on my Nissan Leaf is going out in 15 months. And then I will be able to get the Model 3. So the 15 months went by and there was no news on Model 3s being shipped to Europe. And then I thought, okay, I wait a few months, but at one point I couldn't wait any longer and I had to buy another car. So this is when the wait times are very low. And when the wait times are too long, there is some people who look at it and they're like, I need a car in 2 months. It's impossible for me to wait, a year or year and a half. So they don't even buy Teslas. So as the wait times come down, it means that the market that they're addressing is, bigger and they have more potential customers. So if Tesla sees a problem with demand, they can decrease the prices without it hurting their margin because of all the reasons I said on the previous slide. So there is a lot of built-in possibility to decrease their prices, which would also increase the demand for their cars. And Tesla could start paying for marketing and, having some marketing campaigns. As we know, they're currently not advertising. They don't do anything to create demand other than having Elon Musk doing very eccentric things on Twitter, which is free advertising by itself, which I don't think people actually count with a lot. But I think that his Twitter account has been instrumental in, making Tesla known and keeping Tesla in the news. The reason why I don't think that the demand issue is a problem is because, one, I don't think that there is a demand issue. And even if there was a demand issue, then there's so many things that Tesla can pull to increase back demand. The very interesting thing is, as the stock price is falling, notice that none of the discussions involve the Cybertruck beginning production, and we know that that car has 1 million+ orders. That is not counted into this. Nobody's talking about the robotaxi networks, which would greatly increase the gross profit and, the net income of Tesla. Nobody's talking anything about the Tesla bot. So if you buy the stock at this price, you're getting all these things for free. And I got this number from Dave Lee. Obviously, it has to pan out. But according to his calculation, Tesla might do $5 billion of GAAP earnings in Q4 this year. So we are in Q4 now. So I understand it's a forward PE, but it's not really a forward PE because it's happening at this second. And that is a 20 billion a year run rate. And so if you look at that, Tesla's current market cap is 600 something billion, and they're earning 20 billion per year, that puts their PE, which technically is a forward PE, but again, it's happening currently at 32.1 for a company that is growing 50% per year. This was all my slides. Obviously, I'm not going to give you investment advice on this channel because you have to make your own decisions. I might be mad. I might be inaccurate. This might be the ramblings of a madman, right? And all I can say is I have never seen a bigger disconnect with how Tesla is doing and the investor sentiment. And for me, I'm treating this as an early Christmas present. And I really hope the stock price goes lower. I just have been so heavily invested in Palantir. I don't have a lot of money left over. So I have to find more ways to be able to increase my Tesla position. But it's definitely my highest conviction play, right in line with Palantir. So let me know what you guys think. Let me know if you're nervous or if you're thinking about selling your Tesla stock, or let me know if you're thinking about adding. If you watched so far, I really appreciate you. Please make sure that you're subscribed and check out the Patreon link if you want to. That would really help me out. And I will see you in the next video. Thank you. Bye-bye.